to week 3, understanding market structure. The objective of this is to identify trends, uptrend, downtrend, consolidation, market reversals, and continuations. So we're just going to focus on market structure, how to identify it, things of that nature, and then we'll just kind of go from there. So first things first, we kind of touched on this, so this part is a bit of a recap plus a little bit more information attached to it. Um, and I know my illustrations are not the cleanest or the best, but this is what I decided to come up with, and hopefully this serves as a good visual aid for you to understand while I'm teaching you what you need to know. So I'm going to try to keep these videos at about 15 minutes. And that's also including actually going into the chart and identifying these same patterns in the market. Um, Today, I'm not really going to do too much of a deep dive in marking up charts, not right now. I really just want you guys to understand market structure. Um, I'll be working on next week's video, which would be liquidity, um, things like that, how to spot it, how to avoid it, and things of that nature. Just have to find a way to break it down to where it's information that'll be easily digestible for you to apply. So let's get started. All right. So market structure is literally just the structure of the market in so many words. So you have the uptrend, you have the downtrend, you have the consolidation, or you would call it people call it like noise and things like that. There are different ways to identify the market, but they're all pretty much the same thing. A bullish market, a bearish market, and a mixed signal market, right? So last week, if you watched the video that I sent, you saw that in the chart, in the candlestick chart that was implemented in one of the videos, it shows you that there are doji candles, which are pretty much just candlesticks that don't really have much body to them. It's just like a very small body and long wicks on each side. So whenever you see those, whenever you see indecisive wicks in the market, um, you do have to, you know, be aware of what the candlesticks are telling you. Um, Give me a second. I need to send something out. So let's just go ahead and get into it. I don't want to make this super long because this is very simple information that you need to know. So you have the uptrend, which is pretty much the buyer's market, and the green arrows represent the impulse, yellow represents the pullback, and it also represents what area of or what part of the market structure it represents. So you have higher highs, which when I explained it last week, it was pretty much just if you see a higher high, it pretty much just means that this high is higher than this one is higher than this one, and then higher lows are the same thing. This low is higher than this low is higher than this one, so on and so forth, right? So the thing that is pretty much similar are lower highs and higher lows. Those are similar. Higher highs and lower lows are similar as well. So higher highs are always going to be your impulse. Lower highs are always going to be your impulse. Your higher lows and lower lows are always going to be your correction and things of that nature. So just take a note of that, write it down. Usually the correction or the pullback retest, you have different ways to, I'll put it on here. You have different ways to identify it, but it doesn't necessarily have to be, you know, one of, it could be either or. It doesn't have to be, you know, just one or the other. Whatever, I feel like whatever vocabulary sticks to you and it works for you, that's what you go with. You don't have to think too hard when it comes to this. Um, it's no need to think hard with this stuff because it can get confusing because everything pretty much is the same thing in so many words. So anyway, you have correction, pullback, or retest. They're all pretty much the same thing. If price is pulling back, it's correcting or it's retesting the area that it previously broke. So, or revisiting it in so many words. So don't get hung up on the word. Just pick one that you identify best with and go from there. It doesn't make sense to overcomplicate this if there's no need to do that. Now, when we have our impulse, we have our correction, and so in this case here, you have market broke above this area here, created this high, retested here, created this low, higher low, and then price continued to break above this high, created a new one, retested this area that it broke and created a new low. So remember, I didn't put it on here, but I'm going to put a reminder. I probably did put it on here. We'll see when we move forward in this, but I just wanted to put this here as a reminder that support and resistance are interchangeable. So again, if you refer to the first videos that were sent out, if you're in my trading group, then you know that these levels these are like minor levels of support or resistance, key levels, supply and demand, however you choose to identify it. That's what these levels are. So price keeps breaking above this area here that was considered an area of resistance at some point, because this candlestick had to close above this area here. It closed it, turned, and it did not necessarily turn into a level of support until price came and retested it. And even if that meant the candlestick might have closed, broke below here and snapped back above it one way or the other, price respected this area. The candlestick in particular respected this area, and we understand that now this is another level of support that price has created, and we're just looking to see how the market reacts to that. And the same thing goes for the next levels moving up forward. Now this up here, I usually treat these as support and resistance, and whatever's in between these is key levels, but technically all levels are support and resistance, in some way, shape, or form. So that's the easiest or the most simplest way that I could break it down to you. Now when you start diving into things like supply and demand, those levels within this support and resistance could be considered supply and demand as well. So again, it's really all about what works for you. Don't overthink this. It's too many moving factors that all mean the same thing at the end of the day. So it doesn't make sense to overthink it. Just see it for what it is, right? So you have higher highs, higher lows for buys. Then you have lower highs, lower lows for sells. So again, just to recap, you have a lower high here, a lower low. This low is higher than this one. This low is higher than this one. This low is higher than this one. This low is lower than this. This low is lower than this, right? And it's the same concept. Correction, pullback, or retest. So price broke below what would have been an area of support if there were buyers sitting up here at some point. Price broke below it. It closed below it. What made it a new area of resistance was that price retested this area, but it didn't close above it, right? And sometimes price might do a fake out and then come back down, but we're not going to go based off of that. We're just going to go based off of what we expect price to do, or what we expect the candles to do. And what we expect them to do is to once it closes below the area that it decided to break, we just wait to see if sellers are going to defend this area by just kind of telling the buyers, no, not right now, you can't come back up here, we're going to take this down to a new low. And the thing is, also always look to the left on your chart, so you can kind of determine what the previous low was in the past, so you can have pretty accurate levels for TPs and stop losses. So yeah, that's pretty much what it is. Lower highs, lower lows, higher highs, higher lows. It's really nothing too fancy. And then you have consolidation, which is just a bunch of noise in between two levels: supply and demand, support and resistance, key levels, however you want to identify it. And it's pretty much, there's no direction happening here. Like, there's no structure here, right? So right now it's just a bunch of equal highs and equal lows. So the general rule of thumb is that when you see consolidation, a lot of day traders will tell you to avoid it by all costs, right? Because consolidation doesn't come with, bro, don't tell me that this didn't record any of it.